Now, in some cases, what can happen is that, just like we saw in the previous slide, if an individual works in different countries, the right to tax is with all these countries for the respective period. But what if the amount of time he spends in different countries is insignificant? In that case, the cost of collection of taxes might be high for countries where the time spent is low compared to the amount of time and effort that is spent to collect those taxes. In such a case, what happens is there's something called a short stay exemption, which is generally provided to these employees. But because, from a perspective of a contracting state, if you look at, a salary will be booked as an expense in the books of a local company or a foreign company, which means that while calculating their taxable income, this will be allowed as a deduction. Correspondingly, if the salary is not taxed in the hands of the employee, the state may actually lose out on taxation. So the thing is that in order to compute the short stay exemption, there are certain conditions that are to be looked at. And the purpose behind these conditions is to maintain a tax parity where the income is exempt on one hand, and at the same time, it is not also allowed as a deduction to the person who's making over the payment. It's not that all people have the benefit of this advantage, only some people have this, provided they meet those conditions. Let's look at what those conditions are. So let's look at what are the provisions relating to short stay exemption. Notwithstanding the provisions of paragraph 1. Now, paragraph 1 basically says that whichever state the employment is exercised, that has a right to tax. But because those particular provisions override the provision of paragraph 1, therefore, if a case falls within the meaning of paragraph 2, then the provisions of paragraph 1 are not applicable. Remuneration derived by a resident of a contracting state in respect of an employment exercised in the other contracting state. So if there is an individual who's a resident of state R and he exercises the employment in the other contracting state, then it shall be taxable only in the first mentioned state. In other words, the right to tax such income shall only lie with state R if. Now, the first thing you need to notice that all these three conditions have to be satisfied cumulatively. If you satisfy 2, 1, or none of them, then you cannot claim the benefit of paragraph 2. Right? So what is the first condition? The first condition is that the recipient is present in the other state as a state RS, for a period or periods not exceeding in aggregate 183 days in any 12-month period commencing or ending in the fiscal year concerned. Now, first thing that I want to tell you is that the fiscal year that has to be considered is of the state where the employment is exercised. What this provision says is that the total period, okay, if the stay is in one shot, or total periods, if a person comes in and goes out from a particular state, should not exceed 183 days in any 12-month period commencing or ending in the fiscal year concerned. We'll come back to how you calculate this 12-month period commencing or ending in the fiscal year concerned. Fiscal year here is the fiscal year of the state of source. So the total stay should not be more than 183 days calculated in the prescribed manner. The remuneration is paid by or on behalf of an employer who is not a resident of the other state. So the remuneration should be paid by an employer who is a resident of non-source state. It could be state of residence, it could be some third state also. Either the remuneration is paid by the employer themselves or it is paid on behalf of the the employer by someone else. And the remuneration is not borne by a PE which the employer has in the other state. So if this foreign company, which happens to be the employer, has a permanent establishment in the state where the employment is exercised, the remuneration should not be borne by such PE. What is the meaning of borne by? Again, that's something we are going to discuss in the next few slides. Now, coming back to what do you mean by any 12-month period commencing or ending in the fiscal year concerned? Let's talk about that the fiscal year is 1 January 2022 to 31st of December 2022. Under this provision, what happens is that the fiscal year basically commences on each and every date, which means that there is a 365-day period which will start from 1st January 2022. It will start from 2nd January 2022 and so on. What this provision says is that for any of such period beginning plus 365 days or 364 days, depending on how many days are there in that particular year, if the total stay during that period is more than 183 days, then you are covered under this provision. Or if for a particular date, so let's say if I talk about 31st of December 2022, if there are any set of 365 days prior to this, or let's say 30th December 2022, between 365 days prior to this date. So for all the 365 days, you have to see whether during the preceding 365 days from that date, there is a stay of 183 days or more. Similarly, for each of these dates, you also have to see whether from that date until the next 365 days, is the stay more than 183 days. In either of these cases, a permanent establishment can arise if the stay is more than 183 days. Let's look at the conditions which are applicable. Where should the employment be exercised? The employment should be exercised in the other contracting state. What is the duration of the exercise of employment? The period of stay, which is the physical stay, should not exceed in aggregate 183 days. And of course, the 12-month condition stays. Who should be the employer? Employer is a resident of the other state. In other words, it should be an employer from a non-source state. If it is from the source state, exemption is not available. Should the remuneration be paid or accrued? It says it should be paid, borne by the PE. What if the PE bears the remuneration? There is no exemption which is available because point 3 is breached.